Hi, it's Adam Hewis, and I'm coming to you from the digital studios of Market Club. And speaking of digital, I don't know of any other company that's more digital than Apple. As you probably are well aware of, if you weren't living on the planet, Apple introduced its new iPad, which quite frankly was a bit of a yawn. I don't think it had the kind of pizzazz most people were looking for, and consequently we've seen the stock come down a little bit here. I think we could see further weakness in Apple. And here's what I'm looking at. This is a monthly chart. So here's how you see it. And as you can see, basically from just around March time period, you've had strong up moves, strong up moves, strong up moves every month up until this month, January. And this is all the hype that went into the iPad. So basically all of this push was this new product that Apple was going to come out, this new savior. But a couple of things I want to look at, and just from a technical standpoint, because technically this market is probably overdone, at least for the time being. Here's one of the things we look at. This is a monthly chart, remember. Nice high, lower high, higher high. So you've got a divergence going on here between the momentum and Apple itself. The other thing that I think stands out more than anything else, I'll take everything off the screen here, and that's this. If you look at the action for today and this month, more importantly, look at this huge red month, and it's called a negative engulfing line in Japanese terms. A negative. This is not a good sign for Apple, no matter what we think of the product. What it is a signal that we put a top in my opinion. Now, next week, we're starting this, the last day of trading for the month of January, and it looks as though Apple's only closed lower for the month, not a good sign. But the product is out. It's going to be basically 2 months before it's actually in consumers' hands. So what I think is going to happen to Apple is we've had this big run up without any kind of correction whatsoever. I think we're going to see a correction which could take us back certainly to the 182 level, possibly a 38% correction down to 162, and then a possible 50% correction down to about the 146, 150 level. This will be a big psychological level. But I'm going to show you the exact number that we're going to be looking at. If we go below, if Apple goes below 185.57, our last triangle, which has been long from 103.60, will go short. It will say the trend in Apple is down. As you can see, our weekly trend is down, our daily trend is down, and we have a minus 70. Be careful about hanging on to the stock. I think we could see further downside activity. And as much as I love Apple, love their products, I have all their products, I still think we're trading the market on emotion and perception. And I think that's more important right now than anything else. So this is Adam Hewison for Market Club. Thanks for stopping by. Hope you enjoyed this short video on Apple. And let's see how things shape up in February.